All right, business owners. So tonight we're going to talk about it. I keep getting the same question over and over again. I want to file, how can I file my personal taxes and my business taxes separate? I don't want to file my business taxes with my personal taxes. And I'm hearing this from LLC owners. And you all need to understand and know how to file your taxes, which tax forms you should be using for your business and your business type, your entity type, and what forms will allow you to file your taxes separately. Most forms of businesses are what's considered pass-through entities. Okay, so today is Tax Tip Tuesday. It's your girl, Beaver Lease, with Tried and True Financial Services, coming to you live to talk a little bit about how to make sure and ensure that you understand and know what tax forms you should be filing. So here's the T. The T is there's a couple of primary different type of entity structures, and the way that your entity is structured, the way that your business is structured, is going to determine how you file your taxes. Okay, and so that's why it's critically important at the onset when you're establishing your business that you educate yourself, that you understand and know how your business is being structured. You should know what your business structure is. A lot of times I ask, well, how is your business structured? And I'll get a deer in the headlights look, and it's like, what's that? You should know whether you are a sole proprietor, an LLC, whether you're a partnership or an SCorp. Those are the four primary entity structures or business types that small businesses utilize. Okay, so if you are a sole proprietor or an LLC, you are going to file your taxes on what's known as a Schedule C. A Schedule C for sole proprietors and LLCs are pass-through entities. So what happens is that you file your income and your expenses on your Schedule C. And on your Schedule C, when you list your income and your expenses, you end up with an amount for your net income. Your net income is then what flows through or passes through or ends up on the front page of your 1040. Okay, so whether you're a sole proprietor or an LLC, you're going to file a Schedule C, and that gets attached to your Form 1040. On that Form 1040 on page 1, you'll see the line that shows business income, net business income. So after you deduct all of your expenses that you have for your business, then that net income is what's going to pass through or show up on your Form 1040. If you are a partnership, you're going to file a Form 1065. That's a separate business tax return. And so on that separate business tax return, again, your income and your expenses are listed on there. And then you are issued what's known as a Schedule K1. A Schedule K1, then you take and you file that with your Form 1040. Similar situation with the SCorp. If you're an SCorp, SCorps file a separate tax return. They file Form 1120S. Your 1120S, again, similar to the other tax forms, list all of your income and your expenses. And then you are issued a Schedule K1. And that Schedule K1, you take and you file that with your personal 1040. Reason being, Form 1065s and Forms 1120, those tax returns are due in March. The reason why they're due in March is to give business owners time to get those tax returns filed so that they can receive their Schedule K1 and meet the April 15th or whatever that time frame is, the April 15th tax filing deadline for personal individuals. Okay, so if you are structured as a sole proprietor or a single member LLC, there is no such thing as filing a separate tax return for your business. By default, if you are structured as a sole proprietor or an LLC, that information is going to get listed on your Schedule C, which is attached to your 1040. There is no separation there. What happens is, and the benefit of being an LLC is because it gives you the limited liability protection. So if you're in pursuit of a profit, you don't want to just remain as a sole proprietor, because you open yourself up to risk with that. And so if you're in pursuit of a profit and you're going to be running a business for any length of time, you want to go ahead and structure that business as an LLC as soon as possible so that you can begin separating yourself from that business. You don't want to just be a sole proprietor operating under your own Social Security number. Even though on the Schedule C, it's going to automatically list your Social Security number and your EIN number if you're an LLC. Both of those pieces of information is reported on the Schedule C. However, what happens is not from a tax reporting standpoint. The LLC provides the limited liability protection because, God forbid, if somebody comes after you and decides they want to sue you, then you've separated yourself from your business, and they can only come after the assets of the business and not you personally. So if you're operating a legitimate, full functioning business, you want to go ahead and transition from a sole proprietor to an LLC, because that's going to give you the protection that you need. But understand, whether you're a sole proprietor or a single member LLC, there is no separate tax return that you get to file. That Schedule C is automatically attached to your personal tax return, and you send and submit both of those at the same time together. The only time you're getting a separate tax return for your business is if you're a partnership, and a multi-member LLC is by default a partnership. Okay, so if it's more than one member and under the LLC, the IRS is going to automatically by default classify you as a partnership. And so then you would file form 1065. Okay, and then if you're an SCorp, you're filing form 1120S, which is a separate tax return. Those two tax returns are due in March, so that you can then get your Schedule K1 that you're going to need to complete your personal 1040, your personal tax return. I hope that provides some clarity. I hope I haven't further confused you. You don't need to necessarily commit all of these details to memory, but I do encourage you to be very clear about what form your business is. You need to know what your entity structure is, what your business structure is, why whomever is helping you establish this entity structure, why they selected that, help to educate you so that you're knowledgeable about why you're under that structure, and then to know what forms that you're completing, so that when you're going out to get grants or loans, or people are asking for your financials, you know what forms to give them, and you know exactly where to find those forms at. Make sure that you're keeping up with the record retention requirements. Okay, so you should be keeping your tax forms for at least 3 years after you've completed those returns. I would say, just for personal purposes, not necessarily for the record keeping requirements, but I would recommend that you keep them for at least 5 years, sometimes even 7, because you just never know. It's different guidelines. It's so many moving parts when it comes to important documents and filing. So if you have any type of real estate that's attached, or you're depreciating anything on those tax forms, then you need to keep those documents for as long as you still have that property. So there's a lot of moving parts. So you cannot, and please don't ever take something that you see on social media or anywhere else for that matter and take it as bond for your particular situation, because there's so many different moving parts that may cause there to be some kind of a nuance that might be a little bit different for you. So take this as general information and apply it to your situation and start the conversation with your professional about what structure you have, why you have that structure, what forms you're required to keep, what your record retention requirements are, and all of those types of things. Make sure that you like, comment, and share this video. Make sure that you're in the comments. If you have questions, let me check. Okay. Yes, bro. You got it. So you know what your business structure is. If you have any questions, feel free to drop them in the chat. But more importantly, make sure that you go ahead and follow us on YouTube. Go back and watch the replay of this video and any others that we may have up on our YouTube channel to make sure that you're staying fully informed about all of your business matters as it pertains to the ABCs of finance, because Tried and True Financial Services is here to help you with the ABCs of finance, to simplify your accounting, budgeting, and credit processes. It's been real. It's been a joy being with you guys tonight. I'm happy to share this critical information, and make sure that you inbox me or let me know if there's any other topics that you would like to hear me talk about to bring clarity to, because I want to make sure that you're educated and that it's simple enough for you to understand. It's been real. Thank you. See you next week on our next segment of Tax Tip Tuesday with Tried and True Financial Services. Have a good night.